War, good God, Lord. What is it good for? Absolutely nothing. TGIF, everybody. I like that, Brock. So a lot of people, a lot of people trying to interpret the significance of the event. The markets did it immediately. So Brock says, morning, Louise. Good morning, coach. Just for a framework view, the Persians kidnapped and killed the Roman emperor and mounted his head as a trophy, and the Roman Empire turned down hard. Just a reference to consider. I'm not a fearmonger, but I do respect history. Thank you, Brock. It's interesting. Okay, so I'm not sure how to, that's a metaphor. Maybe you could explain how it is an analog to what's going on here, because, okay, we took the head of like the Roman emperor. So that means they're going to turn down hard. Anyway, so, guys, one of the advantages of bringing in guests is it's really another way of intelligence gathering, because I bring in experts in different areas of the market. And I'm not sure if you guys remember, Anas was with us. He's goes around the world and people pay him a lot of money to hear about his thoughts of on the oil market, especially what's happening in the Middle East. So I thought I'd share it with you. And what's nice is I don't even have to go out and seek it. They bring it to me once they, enjoy being part of our community and coming here and sharing what they know and getting some visibility anywhere. Here's Anas's take. Iran has no choice but to retaliate publicly, but the U.S. fleet and Gulf armies are on high alert, making it difficult for the Iranians to do something big. They will choose a soft target. They cannot attack any oil facility in the region. An attack constitutes declaration of war on a neighboring country, and a declaration of war on any Gulf state will make Iran lose its European and Asian friends. Therefore, they have to hit an American, Iraqi, or Syrian target. Europe and Russia diplomats will be working around the clock to de-escalate. No war. New war. Okay? No war. So that's Anas's take on what's happening here. It's a war if you were, long S&Ps at record highs, short the gold, long the yen. So here we go. So this S&P here, after making a new high, Steve told us not to worry about it. I heard actually Steve Vogie shorted that high yesterday. Man, you've got big ones. Big cojones, Steve Vogie. All right, so we're on the verge of a weekly reversal, 2-week reversal. We're right there. 32.21 is a 2-week off number. So after making new highs, look how we diverged up here yesterday. When Steve was talking about it, he said, don't worry about it. Well, the rally was here, and then it extended, but still did not confirm on the 1 hour. I don't even think it confirmed. Yes, it didn't even confirm on the 1 hour. So somewhat negative, you have to say. Let's see if the bouncing ball, what were those balls that really bounced? Super balls, like a super ball. See if it could bounce off the floor here. But pretty negative week, very negative day. So perhaps this target that the guys were talking about here can still manifest at 3160. Okay, now here's something, I was working the short side of gold for scalps, and actually yesterday at work. Keep in mind the time frame that you're working. So I had a 3 drive right here, 1, 2, 3, and it broke $10. But that was in the day before it worked. My mistake is I kept a piece for a position, but thank God I put a stop over this high. So no harm done. And I look at the gold and, it has a much stronger RSI structure. you know, we're not confirming the high, but it's all the way up at 80. But look at this. You can take a picture of a 3-drive formation here. I'm short silver, and I want to build this position. So sometimes on these events, and you guys probably have seen them if you've been around for a while, just one that comes to mind was the attack on the Saudi oil field that spiked crude. Where was that spike? It was here, and then this. Didn't give it all back the next day, but this was another geo event with no follow through. And guys, it's not a pip. I don't contribute to what the guys do here at ForexAnalytix. I'm just here to, share a few of my ideas, interview people, and interact with the team during the face. But this is pretty classic silver 3-drive right here. And I don't think it's unreasonable to be looking for 1740, especially if Anas is right and things don't really escalate. I think that the market has a lot of this discounted in case, if he's wrong and it turns into something like a conflagration, then, all bets are off. And, kind of a strange time for this to happen. Would you say that this would distract people from the impeachment? You think it does? Hi, Ingmar.
That was my wife's initial thought last
Yeah?
night.
Yeah. Well, you married a smart woman.
I married a liberal.
Oh gosh.
So, of course she was going to say that.
Oh, all right. Well, anyway, I was the opposite in my marriage. Okay. So Ann was very conservative, right wing. And, I told her to take her sheet off her head once in a while. But yeah, how does that work out? Do you guys try and avoid not even talking about Trump and things like that in your own home?
Well, just so you know, I'm not a Trump fan, and I never have been. So this is, and I'm a registered Republican. So you have to go back
to when it was
and I don't want to turn this into a politics conversation.
Yeah.
I'm just saying I have not been a Trump fan my entire professional career in 25 years. And so, and like I said, I'm a registered Republican, and I'm, but I'm not going to say anything more than that. But my wife she is liberal. So, and so good balance
in the family. How did the boys turn out? Like dad or mom? Do you know yet?
No, they are, we let them draw their own political conclusions.
They don't care right now anyway.
They do actually, believe it or not. Yeah.
Teenagers care about politics nowadays.
They do. They do. I think this generation is going to be very sensitive to politics, I think. But anyway.
So what do you think? Did you survive the new rally high in S&Ps and
Oh yeah,
stay with it?
Yeah. I actually went long the Euro Mexican peso overnight. Oh, so nice. I closed that out around current levels, and that was a really it was like, when that happened and the announcement that they
picked him off.
The Iranian general was killed. I bought the Euro Mexican peso right here at literally at 2106.
Nice.
So yeah, this is a good trade. I mean, it may not look like a lot, but regarding this particular pair, it's a pretty big gain. It was sizable.
A few quadrants up there, going up on the chart. Nothing wrong with a few quadrants your way.
No, this is like a 0.5% gain, and I took it off at like 21.615 change, so near current levels.
What's your take, Blake? You think it's going to escalate?
I don't. Well, Pompeo's out there right now, trying to calm things down a little bit.
Yeah.
And it's reversed the S&P and the overnight, price action. So, I don't know if he's going to be, it's going to be interesting to see the Iranian response over the weekend. I think, some of the potential cyber attacks is like one of the bigger concerns right now. But, I spun out of the Euro Mexican peso and I turned around and bought the Euro dollar and also the cable. So, if you guys didn't hear the midday market update or the daily roundup webinar yesterday, I am going to be hosting those for the next few months. Paul Franco has done a great job over the last year hosting those. We're just changing it up for the next few months, and I'm taking those over. And it, yesterday I talked about where the euro was at. You have to go back and by the way, they are free to listen to, and it's at 12:30 p.m. Eastern. And I talked about the euro where it was trading at the 111.70, and I'm going to put in some bids down here at 111.30. And I got triggered on the euro dollar overnight. And then I also picked up the pound when it dropped down towards the 618. I bought it this morning around the 60 level. And, we're at 95 now. So it's bounced quite substantially. And I'm just taking advantage of some of this volatility in the market. Matter of fact, what I probably will do here is take a little bit off.
So you got your Christmas, New Year's wish.
What's
more
that?
Volatility.
Yeah, just want to get a little bit of volatility in, and we are getting some volatility, which is good. I think it's good for us, that are actively trading the markets, just trying to peel off some pips here and there. But I think these dips in the euro dollar are good opportunities to be on the long side, because overall, as I mentioned, the last couple of days, I think the euro dollar is very bullish, and you can see if you have ForexAnalytix, first of all, we put in a new active pattern in play this morning in the euro dollar a couple hours ago. But more importantly, here's your analysis this morning. The euro dollar has moved back to the 618 retracement and allows for a good risk reward for longs near term. And that was when we were trading down at 111.30, and here we are at 111.40, 46. And just remember, there's channel support, previous trend line supports that were below the 200-day moving average. And if you read the analysis from last night, the analysis is the euro dollar could find support once again at the 200-day moving average near the 111.40 level, as many traders are leaning short, citing a false breakout. However, the up channel red could be supported for bulls on dips all the way to the 111.20 level. Today's low was 111.25. All right, so we basically dipped below the 200-day moving average, came near channel support, and we're bouncing, as we had been expecting. So again, if you're using ForexAnalytix, you're up to date on all of this analysis. And even if you aren't a ForexAnalytix subscriber and you just happen to listen to the midday morning or the midday daily roundup yesterday, I told you guys, look for a dip down to 111, 30 or 40, to take advantage of. And it's not like it's gone too far right now. We do have some important data today. If you guys were thinking, oh, it's Friday and I'm going to just, a lot of the Fridays for me is, as soon as the data comes out this morning, here in the next, 15, 20 minutes, after about an hour from now, I can pretty much write off the rest of the day. But we have ISM today. We have ISM ISM manufacturing data coming out today, and we also have FOMC meeting minutes. So we have a lot of data coming out today. So if you are thinking, oh man, I'm done for the day, I don't need to do anything more, hold on really quick. I'm taking my cable off just so you guys know. I'm out of it. I just booked. I got to write this down. One of my New Year's resolutions this year is getting back to my doing a journal. I think because last year was such a challenging year for me. I had hold on, out, pound. I'm sorry, I'm writing this down. I got my entry was 66, so I out at 97, so 130, 97. Okay, I just had to write that down. I'm journaling everything once again, and you know, I'd gone many years without journaling my trades. Last year, as most of you guys know, was such a challenging year for the FX market. What I realized this year is I really should be journaling everything, just because. Hold on. I should be journaling everything, not because, you know, it's just it's good practice. And last year's low volatility environment was a very stark reminder to me that journaling is important. You know, even if I'm actively trading, and I mean, when I say actively, I mean I'm in and out within, you know, an hour, sometimes 15 minutes, sometimes, you know, a couple of days, depending on the trade. Like I got long the euro dollar, and I'm actually going to try to hang on to the euro for the next few days. I do believe that the euro dollar is going back above 112. The cable's a little bit, you know, more of a, you know, I'm not sure if I trust the cable yet. I do want to be long the pound overall. I think the pound dollar is you know, is a trade that's going to actually do quite well this year. I believe that we're going to be rallying well above the 140 level. So I do want to be long. It's just, you know, I have more confluence on the euro dollar at this support than I did at the pound just at the 618. Ultimately, like, you know, over the weekend, you know, or going into next week, if I can get long the cable down here at like 130, that's probably going to be the better level for me to play on the long side. That's what I'm hoping to do. I may not even get it. I may not even get that opportunity. But like I said, I think my entry on the euro dollar was more precise. And it may end up being the pound was the more precise entry, you know, this morning. It may have been. But both of them I played basically, you know, both the euro dollar off the 618 and the pound dollar off the 618 basically is what I was playing. And I'd been planning those trades for the last couple of days. If you look back at my my notebook and my trading journal, I have notes for the last couple of days that have been citing those areas as levels that are very interesting for me to be on the long side. Now, hopefully, you know, being long the euro dollar at this point, the thing that I could really hope for right now is the ISM numbers coming a lot worse than expected. If you look at, let me see if the data flash is showing ISM up yet, because it might not pull up for another. Well, I guess it is. Yeah. So the ISM, you know, forecasts are for 49, and you know, previous is at 48.1. If we come in at 48 again, and we match those low, the previous reading, that's going to be pretty bearish for the U.S. dollar, because people are going to start looking at the you know, well, they'll look at the employment component of that ISM as well, but you know, expectations, whether you're talking about GDP or quite possibly employment as well, those expectations may come down a little bit, so that would be bearish to the dollar. So you know, what I'm hoping for, best case scenario for me, being long the euro dollar at these levels, is that the ISM comes in a little worse than expected. And so you know, a couple other developments that I want to bring to your attention. Things that I talked about yesterday is, yes, the S&P is down a percentage point, but more importantly, that these yen pairs have been really underperforming the last couple of days. It's almost like that the yen pairs knew what was going to happen last night. They'd already been selling off. They'd already been leading this market lower. And if you look at the euro yen, for example, the euro yen, and you guys would have noted this an hour ago, the euro yen hit the 161% extension of this move when we were down at 120 and a quarter, and we've bounced about 25 pips since I posted the analysis. And what I think is going to happen with this euro yen, based on the recovery that you're seeing in risk, so you're going to see a move back up to 121 before rolling over again. So that I didn't want to do. So like I said, we're seeing a recovery in some of these yen pairs. That the Aussie yen went down to the 618 as well. If you, again, this is analysis that's all on ForexAnalytix. The Aussie yen has reached the 618 retracement and is also at horizontal support. Could see a bounce near current levels as the RSI is very oversold. Bears, be careful. We were trading at 74.88 when that analysis came out, and it has bounced since then about 30 pips. So again, these are all things that you guys have, as ForexAnalytix subscribers, already been notified. And look, you don't even have to be a full subscriber to ForexAnalytix to receive that analysis, and be in the chat rooms, because in the chat rooms, as you can see, I just noted that, hey, I'm out the pound dollar for 30 plus pips. We're all talking about the markets in the chat room, but if you're just a ForexAnalytix Lite subscriber, you get that the basic technical analysis with ForexAnalytix, and that's only $19 a month. So if you haven't tried us out, make sure you do so. It's right here. It's here's our pricing, just so you know what it is. The monthly plan at the premium plan is $120 a month, but the Lite plan is $19 a month, and you have the app, and you get the basic technical analysis when it's released. So you would have been notified of all these moves as they were happening this morning, even on this Friday, on a week where most traders aren't even in front of their computers yet. So anyway, so Dale, what are you thinking here? What are you thinking with this little sell-off in equities? Is this it? Is this a false breakout above the highs it, or are we what else have we got going on?
I think that if we needed to close under 32.21. I don't know. I have more conviction. I know it sounds strange. I still have some shorts from, the eclipse, but I think, gold has really been a lot stronger than silver the last week or so. And silver finally made a new high, not a new high for the whole bull move, but a new high. And I'm thinking that if the S&Ps do suffer, and it is an industrial, that we could break back to 1740. I almost have more conviction about that, but I certainly wouldn't be long here. I think we're going to, I think Steve had it diagnosed, you had it diagnosed, and there's just one more jiggle to shake it out. And I remember when Steve was talking about it yesterday that it was nothing. And I said, well, if it does make a new high, it won't confirm. And it didn't. Who would have known? It sure was tough to go home short last night. I thought I was just going to get wiped. But anyway, yeah, it's negative, but I think silver has a weaker chart than S&Ps. That's it. So even though it's counterintuitive to want to be shorting any precious metal into possible, escalation and retaliation, I think silver is going to pull back, and there'll be much better position opportunities under $18, more like 1740, 1720 even. So I'm kind of bearish silver, I guess.
Yeah.
Can you get yeah, just for a swing?
Well,
not long term, just a swing.
What I did is I took the pattern and play off.
Yeah.
I took the pattern and play off personally.
Yeah.
And hold on really quick. I'm gonna resume share here. I took my pattern and play off because what happened with gold is near the trend highs. And and so Mirko asked, show us your notebook. This is the way I took a picture of it, and I just emailed it to myself so you guys could see. That was from literally about a minute and a half ago. So you can see this is my
That's
journal
cool.
of what I do.
Yeah.
Yeah.
Good
And
penmanship.
obviously green are profits, and I haven't had actually a losing trade this morning or this year yet. So it's only been 2 days. I knock on wood.
You're perfect this year.
Yeah. Huh? What?
You're perfect this year.
I'm perfect this year. Good news is I'm only a day and a half into the year.
It's a good start, man.
Huh?
You know, so goes January, goes the rest of the year.
Time
Yeah.
Theory, you know.
to start
Well,
counting. Time
I still
to
got a
start
lot
counting.
I got a lot of days left in January, so we'll see.
Time to start counting annualized gains based on the 1.5 day performance.
Right.
Oh, what are you gonna have, Steve? About 1,000%?
I know. I'd be like, I'm retiring right now. Just as you got. Hey, if you would have seen my December trade journal, which by the way, my trade journal, I was doing trade journal actually into the end of last year. But if you would have saw my December trade journal, it was a disaster. I mean, I really was trading like an absolute just moron in December and November too. November and December. And I told you guys at the end of last year, I actually had my first down quarter in, I can't even tell you when my last down quarter was. And last year it was horrendous. I mean, last year I made money, but barely. I'm talking barely. I mean, like break even, barely, so last year for me was a kind of a wake up call. Like, hey, in these low volatility environments, I really need to be, taking a good account of what I'm doing and staying on top of it. But
we are getting a decent flight to quality. Pre-market TLT's up sharply, yields are down sharply. So, I always thought that was going to be part of at least a correction in the S&Ps was going to be one more blow off. Kind of like I know a lot of guys are looking for one more high, one in bonds, one more low in yields. And then we have, because the dollar's accelerating to the downside after that, yields begin to spike quite dramatically. But one more hurrah in the bond market associated with risk off makes sense to me.
Well, here's the thing, and I'm going to leave it to Steve and Stelios once I'm done saying this. War is not, and I use the term war loosely. Let's not, I'm not insinuating we're in a wartime situation, but typically the markets are not negative during wartime situations. Now, what we did last night, and killing this general, some are going to say, oh, that's, we're, warmongering or blah, blah, blah. What you guys are going to take your views on whatever you think last night's actions were. But I will tell you this, that during periods of conflict, it's not bearish equities. So, not that I can remember. Maybe, since Dale's like, 432 years old, you might be able to tell us what happened during Vietnam. Just kidding, Dale.
Yeah, no, we were passing around joints.
Right.
I can tell you.
And making Blake babies, apparently.
In the dorm room, yeah.
And making Blake and Stelios babies back in the 70s.
Yeah. Free love, man.
Stelios, I threw you in there too because you were only a year older than me. So
all is fair in love and war.
and anyway, no, jokes aside though, guys, during conflicts, equities tend to, do well anyway, but I'm not saying that this time will be different or it's not different because we have come off a 10-year rally in the U.S. equity market. So this year could very easily be different if this.
Well, before you were watching markets, Blake, and you were on the ground in Gulf War I, markets were going down, oil was going up, gold was going up, and then on the day that we launched, Schwarzkopf launched and told you where to go, that was the bottom in the stock market and the bottom in the gold market and the top in oil on the day of the initiation of Desert Storm.
Well, that's probably because it was widely anticipated that it was going to be a pretty quick affair, right?
Well, it was also a 2-month buildup or so before they had all their equipment there, right, Blake?
Right.
I mean, it took a long time to get ready to do it.
Right. Yeah. So anyway, the thing is,
trade your charts. That's all.
What I would do here, as far as like equities goes, don't read too far into this. But what I would be a little concerned with is, and I know Steve's been pointing this out, is we approach the 3,300 level in the S&P. This is a 161% extension of this. The move that we had last December, the big sell-off, is 161% extension comes up there. I honestly do not think that I think that let me see how I want to phrase this. I don't think that level is untouchable.
No,
I think that it still can be hit. I would, and I'm just going to tell you what I'm personally going to do is if the S&P does reach the 3,300 level, as let's just like think ahead, like, nothing happens over the weekend. People, are like, oh, I don't want to hold on to stocks over the weekend. It's, things might escalate. Let's just say they don't. Next week, we could very easily rally into these highs. And I am going to look to sell into that strength. So I'm just telling you guys my personal playbook on how I'm going to attack the market if it plays out that way. I'm a pretty big fader of 161% golden fib on any big move, what I consider is a big move. In the S&P, this was such an exaggerated move and a very convincing one that I believe the 161% extension up here will be, for me, an optimum place to sell with a tight stop. So that's, again, and I could be completely wrong. This weekend, how about if Iran does something crazy and they start unleashing, attacks on U.S. troops abroad, and things escalate? I mean, then I could probably safely say that we've seen the highs, today.
Yeah, I think the most destructive thing they could do is create a problem in the Straits of Hormuz, which would continue to, I think that would have more of an economic impact to keep driving oil higher with supplies being disrupted through the Straits of Hormuz. That could have some impact, but it might even be friendly to the market because oil shares are part of the S&P, a much smaller part because they've been out of favor for such a long time. They're like 5%. They used to be 15, 20% of the S&P. So, that could even be constructive for the market. But, the Straits of Hormuz, I think, is the kind of like the real critical choke point for this whole thing.
Well, yeah, and so let's see how we react there. Yeah. I'm going to say, hey guys, just a couple of quick things. Thank you for listening in every day. Happy New Year to everybody that's listening in. I'm going to pass it over to Steven Stelios. I'm going to reiterate that it won't be today, the midday market update, because we don't do them on Fridays. But the daily roundup webinar is at 12:30 Eastern. It's the same link that you use here, but you should sign up via Twitter and you'll get an email reminder every day. Like I said, it's at 12:30 Eastern. It's after, I'll basically, say, oh, this is what I was talking about this morning. Oh, this is what happened, a couple hours later.
It's like a follow-up to FACE.
It's a follow-up to FACE, and it's a quick 10, 15-minute follow-up. And then I'll kind of give you guys an idea of what I'm looking at going into Asia, just like I did yesterday. I'm like, hey, I'm looking for a Euro dip to 111.30, to be long. And I got long, and I bought those levels. And so it's a follow-up to FACE. Listen in Monday through Thursday. And with that being said, Steve Stelios, good morning, gentlemen.
Hello. Good morning.
What?
TGIF.
TGIF is right. It's, yesterday I was talking to my really good friend and neighbor. We travel with their family on vacations, from time to time. And I was talking to him, and he's like, I thought it felt like Monday all day yesterday. And I'm like, I know. When I was on the webinar, our webinar yesterday, I kept saying, over the weekend or on Friday. And what I meant to say was like Tuesday. So, but you know what? If Monday, if every Thursday feels like Monday, I'll take it.
Would be great, right?
Because that means Friday is the next day. So anyway, have a great weekend, everybody. Happy New Year. Thank you all for listening in. And Steve Stelios, it's all yours, and Coach, obviously.
Thank you,
Take
Blake.
it easy,
Thank
Blake.
you.
Hey, thank you guys.
Thanks.
And Coach, keep singing. I like that.
War?
Yeah.
Oh, yeah.
Talk to you guys later.
All right.
Bye.
All right.
Speaking about New Year resolutions, yes, keeping a trading journal, and that's an advice for everybody, is always a good idea, because you
Do it, bro?
You force yourself to. Yes, I do it most of the times. I do it. Yes.
Okay.
I say most of the times. I'll explain. I always do it for trades that I consider like swing trades. Sometimes, if I want to take some of a market, which is not happening frequently with me, I'm not going to keep that. But, my regular trades, I do keep them.
Okay.
And
Greek?
this is one of the, in Greek. I mean, there's no
So if
Greek
I
for
looked
that,
at it,
because
I'd be able to say, hey,
Yeah, of course
Steve,
you
that's
would.
good stuff, but it's Greek to me.
No, because
All right.
it's very it's very brief comment, so it's it's nothing hard to actually read. So this is the reason the reason for me saying this is because we plan on developing a trading journal for our members as well, because we do consider it of great value to to keep a journal. It is of great value because it forces you to be honest with yourself, to plan ahead, which is important. Blake anyhow always plans ahead. He doesn't need a trading journal for that. But some people get carried away from price action, and they go into doing stuff that they haven't planned ahead. So a trading journal in essence forces you to have discipline, which is very, very, very good as a principle. And another New Year resolution is that if you haven't done so already, you should start. And I'm talking as a person that actually did the mistake of not doing it for several years. You should start taking advantage of the commissions your broker takes away from you, and take some of them back by participating in our reimbursement program through Forest Park Effects. They can help you either find a new broker if the broker you're trading with is not ideal for your trading style, or you can even stay at the same brokerage firm that you are and get either cashback rebates or a credit to your ForexAnalytix account, so you can perhaps even have a ForexAnalytix subscription for free. So I strongly advise for it. I mean, it's literally free money. It's money that you get back from your trading, and otherwise they would all go to your brokerage firm. So as a New Year resolution, I think those two are good enough, right, Coach?
Yep. Yeah, I think it's a great idea for everyone to do it, and that way you're going to learn from your mistakes. You can't remember everything.
No, you can't.
That's one of my, I always say write it down. And also NLP has proven that when you write something down, it has a much stronger impact on you.
Yes,
Yeah.
yes, very correct.
Yeah.
And one more thing. I've noticed by trying to help traders in the past, I've noticed that very frequently people don't realize what their strengths and weaknesses are. So I've seen people that I'm telling them like, okay, send me what you're doing, and they're forced to write things down so they can send me what they're doing. And then besides the fact that it helps them to keep record, I notice, and they notice, that for example what they believed they were doing a good job with, they're not actually doing a good job with, and what they were underestimating, they might be much better at. So sometimes people realize, and I'm not going to give names or whatever, but I've had a specific person, for example, that was trading very frequently stocks, right? I mean, indices. So that was very unsuccessful. So once I pinpointed that you do quite well in the FX, but you keep trading like the index, and you're not doing well there. So if you completely stop trading the index because that's obviously not your strength, you're going to have a much better performance, but not altering anything else. And they realized that just because they wrote things down, because obviously they hadn't realized that they were mostly losing money from there and making money elsewhere. I know it sounds very simplistic, but sometimes you just need to also notice what your strengths and weaknesses are and focus more on your strengths, and not trade things you're not so successful at trading at. As simple as that. I mean, I know it sounds very simplistic, but sometimes you need to see it down, written to realize it. So, Stel, did we have anything worth mentioning from the fundamental perspective?
Nothing changed. No, I'm kidding. But where do we start with this? I'm going to start with something I posted on the chat room this morning, and it's the front page of the New York Times from December 19th, I think, 1998, and it says, "Impeachment vote in House delayed as Clinton launches Iraq airstrike."
Yeah.
So history does repeat itself a little bit, It's
even when it doesn't, it does rhyme, right?
Yes,
as they say.
Absolutely. So we've all seen what's happened. The question is, what happens next? And I've seen a lot of people saying, "Oh, World War III is coming," and this and that. And I'm like, World War III comes, and it comes properly. There's not going to be anybody left, like Dale said in our Skype.
I think
anybody left to tell the stories.
I think Albert Einstein had said that many decades ago, that I'm not sure what weapons World War III is going to be fought with, but I know that World War IV is going to be fought by sticks and arrows.
Yeah, exactly.
Yeah, so something like that. So I think this says a lot.
So this kind of scenario, I think, is a bit far-fetched.
Yeah, sticks and stones.
But a lot of the guys, a lot of the gloom and doomers, I don't know, I read their stuff. They say don't worry about World War because each individual nation is going to be so busy contending with their own populace, with civil unrest and social strife, that they're not going to have the troops or the wherewithal to launch a world war, because they're going to be preoccupied with trying to control the population of their country.
Yeah,
might be the case. We definitely see since quite a few years ago the obvious increase in social unrest.
Yeah, it's almost like all the things, like, in Spain, what is it, the Catalonians, and it's almost every nation has some type of separatist movement based upon ethnicity, and and then if the economy gets bad, people, Hong Kong's not the only place that people will go to the streets.
Yeah.
Right? I mean, look at what they've done in France already. I mean, they paralyzed the transportation. You don't hear much about it, but there's a lot of social unrest in France right now, isn't there?
Oh yeah, of course. And don't forget a few months
by media.
Yeah, don't forget a few months ago we had like huge riots and things like that. And as Stelio said, these events are usually covered less by the media than somebody would expect. But of course, the problem doesn't go away just because you don't cover it in the media, or you don't cover it that much.
Oh my God, and they showed something about what China's doing to their Muslim population. There's actually a genocide going on in one of their provinces with Muslims, and demolishing their grave sites, and they're all in these retraining camps where it looked like Nazi Germany in China. Really, I mean, there's so many things that rhyme with the 30s right now. It's kind of very
including including monetary
financial
policy.
markets. Yeah.
Yeah, and monetary policy. Yes, very true.
Yeah. So the question now is what retaliation is going to be, and like Blake said, I think U.S. troops abroad are in danger, but
I bet they
I
have
think
sleeper cells here in the U.S. still.
yeah, of course,
Oh,
they
for
might,
sure.
of course, yeah. But the question, I think, that what they're probably going to do is wage a different kind of war, like you said, Dale. So, Hormuz or whatever they choose to do, they can create some damage if they want to.
Yeah, they're not Iraq. They're
No.
a much more powerful nation than Iraq ever was.
And the question also, I mean, obviously, it's not going to get to that, but the question is whether they have nuclear capacity, and officially they don't. But I was reading some reports back in, what was it, 2010, which were saying, they're a year away from being able to, to deploy nuclear
Yeah,
weapons.
they were enriching uranium. There was no question about that, and there were different assumptions about how long they still needed to reach weapons grade enrichment.
North Korea cooperates with Iran.
Oh yeah, those countries always.
Yeah,
I mean,
and Iran's friends are China and Russia too. They could help them.
Yeah, it's not that easy, but suffice it to say, it is an issue, right? I mean, it is an issue, but I don't really think that we're in danger of seeing some kind of a global escalation having to do with war. So I agree with you, Dale. I don't think that some kind of a war is around the corner, or that's what we should be afraid of.
Yeah, these guys say be afraid of civil wars, not global wars.
Yeah, that's a much more likely scenario in the medium term.
I don't like either. Yeah. I like peace on the park bench in Athens.
Yeah, who doesn't agree with that? I mean, peace is always preferable to any alternative. Regardless,
peace and money. I like peace and money.
If you like peace
money
and money,
gives me peace.
If you want to combine them in one asset class, there you are, gold, which is testing previous high. I don't know, at some point it might
call on that, Steve.
It might pull back, but really I don't think it's stopping. So
I tried it yesterday. Thank God I had to stop in. So
yeah, I think we're headed quite a lot higher. Of course, in the short term, we are very overbought. I mean, looking at the daily RSI, it's roughly at 82 as we speak. So yeah, at some point we're going to see some pullback. We might do it from here because this is a resistance zone. But I do think that it remains a buy on dips. No questions asked about it. And
doesn't silver look kind of ugly to you compared to gold? How it's been lagging and the RSI pattern. Yeah, look at that candle that it's trying to put in.
And if you look at it in the shorter term, we also have this channel here in silver that I was monitoring. So yes, it does look like it's exhausted. You can see here in the 4-hour chart, this is a 3 drive, right?
That's why I'm top picking.
1, 2, 3, and the RSI clearly diverging in those two higher highs. So yeah, I do agree with you. I think we can easily pull back at least towards 1765, 1770. Yes, it is underperforming, but do I believe that in the medium to long term, the fates of silver and gold can really diverge? Not really. I mean, even if you look at the gold-silver ratio, perhaps what we're doing here is just building
for another wave down.
Yeah, perhaps that's what we're doing here, something like this.
Okay.
Right?
Could be.
Yeah. So I wouldn't be that pessimistic about silver. Okay. Yes, in the short term,
just a trade.
In the short term, it looks like it is very likely it's going to pull back. But
just what the market offered today, long term, I don't know.
I would also approach any real pullback in silver as a buying opportunity, along with gold. So I think they're going to share the same fate. Sometimes, you know, one of them overperforms the other, but usually, as you know very well, when metals do well, silver tends to overperform, unless the reason they're doing well is because of fears about the monetary system, or geopolitical risks. So in this case, it makes sense that gold is overperforming because, you know, we have some geopolitical jitters today. Now, keep in mind that I think that one of the reasons the market reacts so much is because, you know, undoubtedly, the market was extremely one-sided. I mean, the fear and greed index hit yesterday 97.
Wow.
Positioning is, you know, one-way street. It has been since, you know, the end of last year. So I do think we were discussing this, and I do think that January might be a month that we actually pull back. So I'm still short the S&P. I'm slightly in the money, and I think it's a decent risk-reward trade here to try to fade this this strength for at least some type of a, you know, reset in the overly bullish sentiment and positioning before we can continue moving higher. Speaking of which,
You know what, Steve? Just something that kind of lines up with your target. If you just take the daily range of the S&P candle, and then if we take out the low and subtract the range from today's low, it gets to your number.
32.10, so it's 50. Yeah, exactly to my number. Yeah, 31.60. You mean? Yes.
Yeah.
Yes, that's
So,
exactly what it targets. Yeah,
I look
that's
for things like that. You know, simple arithmetic.
Yeah, that's my first target. 31.60, I think, is the first decent area of support that we can find on the way down.
So all we have to do is duplicate today's range, and we're there.
Yeah, and which we can easily do within 1 or 2 trading days, right? Very easily, because as you know better than anybody, usually these kind of markets, they have one-way price action most of the days, but when you get pullbacks, they can be very, very sharp. So you can end up retracing 4 or 5 bullish days within half a day. It's what we say, up with the escalator, down with the elevator. So, you know, it can take you a couple of weeks to move from 31.60 to 32.60, and then you can go from 32.60 back to 31.60 within 2 or 3 trading days easily.
Yeah, we could be there Monday.
Oh, easily.
Tuesday. Yeah,
easily.
Yep.
Easily. I mean, if we have some kind of escalation during the weekend, we can easily gap down and, you know, move to the target within Monday. And I'm pretty sure that a lot of people are going to be thinking about that today. Like, you know, do I actually want to go long risk during the weekend? You know, think about it. Would you?
Yeah. No.
Exactly.
This, you know, could be a game changer for a while. So prudence over valor all the time. Don't be a hero.
Exactly.
A lot of dead heroes in the market. Thankfully, I've had some resurrections, or, you know, I was buried a few times. So yeah, don't be a hero.
Indeed. Gautam says, Happy New Year. It's pretty clear to me that the S&P, this is the top that we're looking for. If you're talking about a short-term top, yes, it might be. Now, if you're talking about a long-term top, you know, the chances are against that. But a short-term top, so, you know, as I was saying at the very end of the year, topping out during the first days of January, and then getting a period of of a corrective move lower. Yeah, it might as well have been yesterday. It might as well have been the short-term top. Now, we will need a lot more stuff happening in order for this to end up being the long-term top. But I want to remind you that one very crucial and important indicator on my charts has been since years this pitchfork, Andrew's pitchfork. And as you see, with yesterday's price action, we overshot the 200% extension. So for me, that's another indication that this market is extremely
Oh, and look at the
overdone.
low held the throw over on the wedge so far. So back inside there, look out.
Yeah.
Okay.
Yeah, exactly.
Nice look.
That's why I still have this wedge. That's why I usually keep formations, because sometimes invalidated formations or broken out formations can then act, as support or resistance. So, as you see, it's this internal trend line, previous ascending wedges resistance, is now holding a support. But as you said, if we bridge through it, I think we're on our way to 3160 afterwards. And then if we go below 3160, in which case we then break through this ascending wedges support as well, I think that then we're looking for 3080 as the next target, and no need to go for more targets yet. I mean, we're here on a daily basis, so as I said, 3160. After that is 3080, and we take it one target at a time. Anyhow, I still believe that risk reward is very, very appealing. Even now that we have seen an intraday pullback, if you see the daily, if you see the 4-hour chart here on the S&P, we've had a nice rebound from here. So even from current levels, I think the risk reward is rather appealing against the highs. So as you see, we're diverging not only on the daily chart having to do with RSI, but we had a huge divergence here, a reliable divergence on the 4-hour. I mean, as you see, that high over there, 27th of December, was with the RSI being close to 85, and this high that we had yesterday was with the RSI being below 70. So that's what we call usually reliable divergence, the second high being below 70 while the first high is above 70. And that was a very nice signal. We topped out exactly at the 127% extension of this little pullback that we had at the very end of the year. And as we said, if we close below this low, I think 3160 is the next place to visit, down here, there. So the risk reward is rather appealing. I mean,
then 3,300 and higher. Maybe.
From 30 to 63, let's say 35 handles.
1.618.
Yeah, and to the downside, we have, let's say 60 to 30, so it's 60 handles. So it's a nice risk reward. 70 handles to the downside, and what did we say? 35. Yeah, 2 to 1 exactly. So it's a fine risk reward ratio even from current levels. Okay, now I wanted to visit a little bit the yen pairs because, as we said, the USD yen was diverging. Speaking about the USD yen, keep in mind that the USD yen suffered, a very nice rejection, but it hasn't yet broken down, right? Because we have remained trapped since the middle of October in this 107.80 to 109.70 range. So we tested the lows earlier today, but we haven't broken down yet. Now, if we do break down from 107.80, I think that the USD yen is moving quite a lot lower. But you might even want to attempt being long against that level. I mean, the risk reward is definitely there. Personally, I wouldn't be doing it, but I'm just saying. Now, obviously, the USD yen was underperforming. I mean, Blake said it was like it knew, what was going to happen, and that's one of the reasons why we've had yen pairs turn lower quite aggressively. Specifically, I want to focus on, first of all, Aussie yen. As you see, I mentioned that a few days ago on the webinar. The Aussie yen was testing a confluence of resistances up here because, as you see, this was the 61.8 of the last move lower. It was this ascending wedges trendline resistance. It was a horizontal support resistance area. It was also a quality target from this leg higher to, what followed higher. So, we got rejected from that area 76.25. Now, does this mean that we're breaking down? The answer is no, not yet. Why? Because what I'm focusing on is we have, as you see, if I zoom in, we have the 200 daily moving average being at 75, the 50 daily moving average being at 74, 75, and roughly at the same level having this ascending wedge support. So nice rejection, but I think now that this has happened, let's redraw. But I think that what you should be focusing mostly on is if we're actually going to break through that trend line support, because if we do, I think there is a lot more downside to follow. Same deal here, or almost the same deal here with the Kiwi yen. So the Kiwi yen overshot this ascending channel by a little bit, reversed lower, testing the previous horizontal support resistance areas support. Now, two alternatives. One, we turn higher from here and we continue higher because this is an area of support. But if we fail to hold this area, and especially if we break through this channel support, I think that this pair is going to be turning lower once again as well. Also, keep in mind the bigger picture here is that the Kiwi yen is still holding within this larger descending channel. So obviously, the closer we get to the channel's resistance, the better the risk reward is for shorts. Now, somebody can say that the daily RSI was above 80, which usually is a bullish indication, right? Usually on a daily RSI, you don't hit levels like 80 something on a bear market rally, which usually that's the case indeed. But as I said, if we do break through this ascending channel, I think there's going to be some follow through, even if that is still part of this price action that we get within this channel. So, that's what I'm focusing on. Now, Euro yen also suffered quite a big rejection because we had both the euro against the US dollar and the US dollar against the yen moving lower. So, it was a double whammy for the euro yen. And the reason I'm focusing on the euro yen is, first of all, it did form a double top up here. That's point number one. And as you see, this was a horizontal support resistance area. Second of all, look where it stopped for the day, exactly as it was testing this ascending channel's trend line support. So the same deal applies here. We break through this trend line support, and I do think that the euro yen is headed quite a lot lower from there. But I wouldn't blame somebody if you wanted to take the long side purely from a risk reward perspective, right? I mean, if this channel is to hold, you have a very, very limited risk and, the potential to make it back towards, 123, what was this? 122.50. So, it is what it is. I mean, this is a pivot for the market. So, if we hold or not, this 120 area is going to determine what we do next in euro yen. Last but not least, the pound yen. The pound yen is back testing this horizontal support area, as you see. And I'm also monitoring an ascending channel, as you see here. If we find support here and we rebound, fine. But if we actually bridge through this 140.50 area, channel is just below it, below there. I think that we're looking at more losses to follow. So as you see, the vast majority of the yen markets more or less look the same. So, they have to make a decision quite fast. They either rebound more or less from where we are, or if they fail from here, I think there is a very decent chance that there is going to be follow through to the downside. Now, the USD yen is obviously mostly been following instead of risk yields. And as you see, the treasuries have been rebounding higher. And as you also see, does this remind you of something? Does this formation remind you of something? Because it is quite similar to what we have what we've had in gold, right? And to be fair, let's add gold on this chart. So look at this. It's like a fractal of gold, right? It only seems to be lagging. So, you know, I'm not a fractal kind of trader, but you know, it's not that I'm not going to notice similarities on occasion. So if I was a fractal type of trader, I would definitely pay attention to this because price action has been very, very similar, and gold has clearly broken out of a very similar formation, right? You can see it here. So, you know, a decent possibility that we're going to get some kind of a similar resolution here for the treasuries, which would imply lower yields, which would imply lower USD yen. So as I said, if we do bridge through the 107.80 area, there's going to be more downside for USD yen and probably an acceleration lower. And that should probably lead to those yen pairs that we were looking for, all of them breaking down from, you know, the equivalent support areas that we mentioned. So, you know, that's something to pay attention to. Mirko says a fractal is a snapshot from a different moment in time. This is just the fact that gold was the better trade in two correlated instruments. Yes, that is the case. But what is also the case is that frequently you do see a market doing what another market is doing with a lag. So gold was the better trade, but nobody says that treasuries can't do some catching up with it, right? They might end up doing so because, you know, you can see a fractal behavior in markets either by finding periods of time in the same market in the past that, you know, it had similar price action, or intermarket relationships, like, you know, seeing one market perform as another market was performing, but with a lag, as in this case, perhaps. So both can be true. Coach, I'm assuming we don't have an interview because you haven't mentioned anything, right?
No, I just felt guilty for reaming you out yesterday. Oh yeah, we do have one. I let him wait 7 minutes.
Seriously?
No, I'm kidding.
Okay.
No, we don't have one.
Okay.
You know,
because I hadn't even noticed the time, and I just saw the watch and it was 4:07, and they was like,
I
oh.
was just letting him knock at the door for 7 minutes, and thank you for your patience. All of our guests that have ever been here on Face, thank you for your patience. Anyway, you know, who am I? Who am I to talk about manners to you? Oh, see, I burped. So anyway, anyway, so that's a wrap.
Yeah, I think, you know, we covered quite a lot of stuff, and
all right. Well, you know,
let's
dreams.
Hope that we're going to have an interesting January. It hasn't started
no,
too badly.
It's been, you know,
yeah.
I mean, everything we've been, you know, hoping for
so far
is starting to happen. So
far, let's hope we see follow through.
Well, yeah, but
speaking
it's going to be
speaking
wild.
of follow through, speaking of follow through, here is the VIX.
Yeah.
And you know, this is what I want to see in the VIX. I want to see a breakout.
Oh, it could break out today.
Yeah, from 16 and change, because I think that a daily close above 16 targets back to 25. So, you know, VIX has been again coiling, again within a prolonged divergence. There's no question about it.
Yeah.
So, you know, cross your fingers. Let's hope for a daily close above 16, and I think we're going to see follow through.
Cool. All right, everyone. Have a great weekend and start journaling.
Indeed.
You're welcome, Marius and Louise and Brock and all you guys, we hope we're adding value to what you're trying to accomplish. If you want to thank us for FACE, really the best way to do it is to sign up with us. So this is just the tip of the iceberg. And wow, you're going to be getting Blake twice a day for free now. So if you appreciate what we do, you can say thank you. 2 years. Brock says it's a great value. I'm not going to argue with Brock. He's an expert on value. So have a great weekend, everyone. Don't just count your pips, count your blessings. And I really believe that 2020, I hope you wrote down your goals, realistic ones for 2020, and that you're on your way with the first couple days on a few things we talked about. So have a great weekend, Steve, and
enjoy, Coach, and
everyone else, and looking forward to all the spoiled traders getting back from the Bahamas and the Grand Caymans back to their trading desks on Monday, and should be a very interesting week.
Last weekend to recharge batteries, and then we are in full action.
Yeah, and nice trading this week, Steve, in the S&P. Very nice. And,
thanks, Coach.
And that's it, guys. Enjoy your weekend. And, you know, we're all here to make money, but it's not our most precious currency. Our most precious currency is time. Thanks for spending some of that with us, and we'll see everyone on Monday. Adios. Universe will bless us. Yes, thank you.